Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, December the 8th. Going to touch briefly on markets last week with the S&P 500 finishing the week up 1.13%, with the S&P 400 a little bit behind, up 56 basis points or 0.56%, and the S&P 500 is measured by the S&P 600 was up 90 basis points or 0.9%. So last week the markets were higher. We talked about off of the comments of Fed Chair Jay Powell as he was discussing the possibility of lower rate hikes as soon as December. And as we fast forwarded to this week, we got the jobs report last Friday, kind of sent markets in a negative trend as the number came in higher than expectations. And remember, we talked a couple weeks ago that good news right now is not necessarily good news for the stock market, and so a strong jobs report can potentially put the Fed in a conundrum of what to do when it comes to future rate hikes and the slowdown of the economy and fighting inflation. So we fast forward to the beginning of this week, and markets were kind of muted this week. We have a lot of economic data coming next week. Tomorrow we have PPI, which is the Producer Price Index. Next Tuesday, we have Consumer Price Index, or the CPI report, and a Fed meeting with their rate hike decision on Wednesday of next week. The Fed meeting starts on Tuesday, ends on Wednesday, with a 2 o'clock press release and a 2:30 press conference to follow. So we anticipated that markets would be relatively muted this week. But on Monday, they had up in New York, they had a CEO roundtable, and they had a lot of prominent bank CEOs, and they were all talking about the pending recession that was inevitable come 23, and with higher interest rates, and that inflation's still going to be high, and that the consumer is just going to not be able to withstand it, and that anticipate a severe or even deeper recession than anticipating. So my question to you and my question to everyone is, whenever everyone on Wall Street typically gets on one side of the street or the other, one side of the boat or the other, however you like to say that phrase, oftentimes whatever they're all in consensus about has already been priced into the market. So it always can be very beneficial to take a contrarian side to whatever consensus is, because you want to be able to capture the inevitable recovery. And let's say we ended up hitting an absolute recession next year. Okay, so we hit a recession. We have been talking about that and pricing in that for quite a while now this year. And the stock market is going to recover 6 to 12 months ahead of when the actual recovery starts to happen. So be prepared, and you want to be able to capture that upside. If you're only prepared for the downside and you're not prepared to capture any of the upside potential and the catalysts that are going to take markets higher, you're going to miss out on a lot of opportunity. A lot of people have asked me here recently, especially with the volatility that we've had in the equity markets, they've asked me, is it a good time to get into the stock market? Well, we entered the year with an S&P 500 at 4,768 points on the S&P 500 going into this year. As of right now, we are around 39 and some change, 3,900 and change on the S&P 500. So yes, if you have the ability to see out for more than a year's time, the chances of us marching back to that 4,700 at some point are going to be greater than us touching the lows that we saw earlier this year at 3,600. What is the catalyst that's going to take us down versus what are the catalysts that are going to take us higher? Remember, the stock market is going to price in and see the recovery before the recovery starts to happen in the overall economy. So if you have questions about how to position yourself as you're entering into 2023, we'd love to talk strategy with you and help plan that out for you. So give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your day. Thank you so much.